Let me ask you a very simple question. Do you think politics has nothing to do with your money? A lot of people do. They think politics is complicated, distant, something only politicians and elites deal with. So let me ask you another question. Does making money matter to you? Because if money matters to you, then politics and monetary policy matter far more than you realize. And if there's only one thing you take away from this video, stay until the very end, because if you leave halfway through, everything you hear will be dangerously easy to misunderstand. Every major wealth opportunity in history and every major financial disaster started with politics and money, long before it showed up in your bank account, your job, or your daily life. And if you can't see the big picture, you don't lose because you're stupid. You lose because you're late. So listen carefully. This is actually much simpler than Wall Street wants you to believe. For decades, there was one phrase almost no one dared to say out loud: de-dollarization, because history shows us something very clearly. Countries that challenge the US dollar rarely end well. Japan lost 3 decades. Greece went bankrupt. Many Latin American countries fell into debt traps. So most nations chose silence, cooperation, playing by the rules. But here's what very few people understand. The rules never changed, only the timing did. And if you don't understand timing, no matter how hard you work, you're just making someone else rich. Let's go back to 2020. When COVID hit, the Federal Reserve declared the economy was in danger. So what was the solution? Print money. A lot of money. Liquidity flooded the system. Interest rates collapsed. Borrowing became incredibly easy. Corporations borrowed, banks borrowed, governments borrowed. And what happened next? Everything went up. Stocks, crypto, real estate, NFTs, even assets with no real value exploded in price. The world felt rich. Emerging markets benefited too, for a short time. But this is the unchanging rule of the game. When the sheep are fat, the shearing begins. In 2022, the Fed changed its tone. Inflation became the enemy. Rates went up. Liquidity was pulled back. And what happened? Assets collapsed. Stocks fell. Crypto evaporated. Real estate froze. People were told to be safe, sell assets, hold cash. And once again, history repeated itself. Retail sold in fear. Institutions bought in silence. Because when the dollar strengthens, the world's assets become cheap. In dollar terms, this is not an accident. This is how global wealth is transferred. And now, the situation is far more dangerous than before. Recently, with Trump's return and aggressive tariff policies, the U.S. reignited economic warfare on multiple fronts: trade wars, tariffs, supply chain disruption, political pressure. Officially, it's about national security. But what is it really about? Resources, power, and maintaining dollar dominance by creating chaos, especially targeting the BRICS nations, not through direct confrontation, but by destabilizing the system. Because global instability does one thing extremely well: it drives money back into the US dollar. Fear strengthens the dollar. War strengthens the dollar. Chaos strengthens the dollar. But remember this: a strong dollar does not mean a healthy system. It means the system is under extreme stress. And when stress builds long enough, something breaks. That's why central banks around the world began asking a terrifying question: what if one day the dollars we hold aren't really ours? Russia experienced this firsthand. Foreign reserves frozen overnight. That moment changed everything. Countries realized something crucial: safe assets are political assets. So they started selling U.S. treasuries. Where did the money go? Not stocks, not banks, not real estate. Gold. Quietly, at scale, relentlessly. Since 2022, central banks have bought over 1,200 tons of gold, the highest level in more than half a century. Why? Because gold has no counterparty risk, no sanctions risk, no permission required. And now people get confused. They say gold doesn't generate cash flow. Gold underperforms stocks. Gold is boring. That's only true if you misunderstand what gold actually is. Gold is not a stock. Gold is not a growth asset. Gold is a mirror. It reflects fear inside the system. Before 1971, gold was money. Prices barely moved. After the gold standard ended, gold became a defense against unlimited money printing. Every time confidence in fiat currency declines, gold reminds the world what real scarcity looks like. Look at the pattern. 2018, trade tensions, gold rises. 2020, pandemic, gold explodes. 2022, rate hikes, gold corrects. 2025, economic warfare, debt, global fragmentation, gold hits new highs. This isn't speculation. This is human psychology on a global scale. When people feel safe, they chase returns. When people feel afraid, they chase survival. And right now, layoffs are spreading, banks are fragile, geopolitics are tense, debt is out of control. Fear hasn't peaked yet. So what's the real question? Does the average person still have an opportunity? Yes, but not by chasing headlines, not by buying jewelry, not by acting on emotion. Gold rewards patience. Gold rewards understanding. Gold punishes greed. If you buy gold to get rich fast, you may lose. But if you hold gold to protect value in a cracking system, history is on your side. Gold doesn't make you rich every year. It makes sure you're not wiped out when the system resets. And in every historical reset, those who preserved value moved up the hierarchy, because when the rules are rewritten, the people who still stand win. That's why the most important investment is not gold. It's understanding the game, because those who control money write the rules. And those who understand the rules don't panic. They position. Now let me ask you a harder question. Have you noticed that every time the world becomes deeply unstable, the US dollar gets stronger? Sounds backwards, right? Wars break out, US debt explodes, American politics fracture, the global economy weakens, and yet the dollar rises. Why? One word: fear. In today's system, fear is the fuel of the dollar. And in recent years, the US has been actively exporting fear, not through bombs, but through economic, financial, and resource warfare. Look at real policy decisions, not headlines. Trump didn't return gently. He returned with a very clear mindset. If the U.S. doesn't control resources, supply chains, and global capital flows, it loses power. To maintain power, the U.S. needs three things: strategic resources, a strong dollar, fragmented and weakened rivals. Start with Venezuela. What does Venezuela have? Not technology, not finance. Oil. The largest proven oil reserves in the world, even larger than Saudi Arabia. Yet Venezuela has been sanctioned, isolated, and economically suffocated for years. Why? Because it refused to fully submit to the dollar system. Recent U.S. intervention, including direct actions against Venezuelan leadership, is not about democracy or human rights. It's a financial message, and that message is clear. Oil stays in our system. The dollar stays at the center. Anyone who tries to exit will pay a price. Venezuela is just one chess piece. Russia is hit with financial sanctions. Iran is strangled through oil exports. China is targeted via tariffs, technology controls, and supply chain pressure. What about BRICS? On the surface, they talk about de-dollarization, local currency trade, a new global order. But internally, they're divided by conflicting interests, economic pressure, U.S. financial attacks. The U.S. doesn't need to destroy BRICS. It just needs to prevent unity. And when the world fragments, money does one thing. It seeks safety. And in the short term, habitually, that safety is still the U.S. dollar. That's why, even with U.S. debt above $34 trillion, over 120% of GDP, the dollar hasn't collapsed. But here's what almost no one understands. The dollar isn't strong because America is strong. The dollar is strong because the world is weak and afraid. And that can't last forever. Look at the data. Since 2020, the Fed expanded its balance sheet from about $4 trillion to nearly $9 trillion, then began aggressive tightening, the fastest rate hikes in 40 years. The 10-year Treasury yield briefly exceeded 5%, a level the global system struggles to survive. What happened? Silicon Valley Bank collapsed. Signature Bank collapsed. First Republic was absorbed. Credit Suisse, a European financial icon, disappeared. This wasn't an accident. This was a system crack. And countries noticed. They started asking, if U.S. and European banks can collapse, where is our money actually safe? Hold dollars, risk of freezing. Hold treasuries, risk of non-payment in crisis. Hold banks, bankruptcy risk. Stocks, extreme volatility. Real estate, illiquidity, and policy risk. So what's left? Gold. Not jewelry, not status symbols. Reserve gold. From 2022 to 2024 alone, central banks bought over 1,200 tons, the highest since the late 1960s. Who's buying? China, Russia, India, Turkey, Middle Eastern nations, parts of Asia, and Latin America. Why quietly? Because gold is a signal of lost trust. No country wants to publicly admit it's preparing for worst-case scenarios. And here's the critical point most people miss. Gold isn't rising because individuals are buying. Gold is rising because nations are buying. Global annual supply is only 3,000 to 3,500 tons. When central banks lock up over one-third of that, the remaining supply becomes extremely scarce. And when scarcity meets fear, price only goes one way. Look at the numbers. 2018, approximately $1,100 per ounce. 2020, above $2,000. 2022, correction to $1,600 to $1,700. 2024 to 2025, above $3,100. All-time highs. What does this tell us? This isn't a Bitcoin-style speculative bubble. It's confidence in fiat money eroding, cycle by cycle. And Trump, intentionally or not, is accelerating that process. Trade wars, global tariffs, pressure on allies, resource intervention. Instability strengthens the dollar short-term, but prolonged instability forces countries to look beyond the dollar long-term. And that exit isn't crypto, it isn't stocks, it's gold. The real question isn't whether Trump is right or wrong. The real question is, where are you positioned in the cycle he's creating? You and I don't control policy. We don't control wars. We don't control the Fed. But we can control positioning. Most people only watch price. Those who understand the game watch flows and behavior. In calm times, gold is ignored. In unstable times, gold is hunted. And right now, we're not at peak panic. The U.S. labor market is weakening. Tech and finance layoffs are spreading. Credit card debt is at record highs. Cost of living keeps rising. But people aren't fully panicking yet. And that's usually when gold keeps climbing. Gold doesn't need your belief. It only needs stress to continue. And this is why you had to listen until this point, because if you stopped halfway, you'd think this was a video about fear. It's not. It's a video about position. So if you ask me, where is gold going? I won't give you a number. I'll give you logic. As long as economic warfare continues, U.S. debt remains unresolved, trust in fiat money keeps eroding, gold hasn't finished its role. Gold isn't about getting rich fast. Gold is about surviving and rising after chaos. And in every historical cycle, those who preserved value ended up on a higher level when the rules were rewritten. If you've listened this far, one thing is certain, you no longer think like the crowd. This channel isn't for people who want good news. It's for people who want to understand the rules before the rules change. If this video helped you see your position more clearly, save it for yourself. And if you don't want to arrive too late like most people, stay with this channel, not to believe me, but to learn how to see the world through the logic of capital flows, not the emotions of the crowd.